I think stock to flow is tracking very well since it was published in March 2019 when Bitcoin was below 4,000. It tracked really well. It mainly predicted that the halving would trigger another bull run. Even I am a bit amazed by that. It's much more fundamental than just an opinion or a model that the market follows. I think there is greed and fear in people, just human behavior, and that will always be there. It's very interesting to see that people like to buy Bitcoin when Bitcoin is going up, although prices are, of course, a lot higher than when Bitcoin went down. But when Bitcoin goes down, nobody wants to buy Bitcoin. There's always greed and fear, and you can model that. And also there is momentum in the markets. That's one of the basic thing in all markets, also equity markets, bond markets, etc. That once a trend starts, there is momentum in that it goes on. And that could be because there's a large buyer in the market that cannot buy the exposure they want in one day or 1 week, so they need multiple weeks or months to build the exposure. Once that gets going, then it will continue. And so the momentum is a very real thing in markets, which of course all the technical analysis is based, for a lot of technical analysis is based on. And then the really fundamental things for stocks, modeling the cash flows, the dividend flows is a very real thing. For derivatives markets, for example options, which is basically a volatility market, modeling volatility is very real and very fundamental. It doesn't change. Yeah, I think you're very right that the greed and fear is something that maybe is the best argument against a super cycle, because that will not go away. We will not have a super cycle this halving cycles next year till 2024, before next halving, because of greed and fear, because there will be FOMO. Once we hit the 100,000, maybe we will go down a little bit, but once we really have crossed that 100,000, then I think the FOMO will set in. People will just buy Bitcoin and will go up to unimaginable levels. But then some people will start to sell. They're sitting on a huge profit and they want to see some of it in dollars. So they get scared, or something happens that scares the whole, and then we go south again, and then that will feed on each other, on itself, the fear, and we'll have momentum to the downside, going to the next bottom. Yeah, something in markets that is so fundamental that will not go away. That having said, most people that are proponents of the supercycle are technical people or have some experience in investing in tech companies like Google and Amazon. And what we've seen in those prices is that there is a lot of volatility in the beginning after the IPO, because there's a lot of uncertainty about the company succeeding and adoption for the product kicking in. But once the adoption kicks in, it goes up in an almost straight line with some volatility, but not the volatility you see after the IPO. I think a lot of tech investors have that mental picture and they think Bitcoin will do the same thing. I don't think that is true, because I don't think Bitcoin is a company like Google and Amazon. I think the volatility in Bitcoin, which has been very high and still is very high. If you look at option prices, the implied volatility is around 100%, so between 90 and 100%, which is huge. That's you can't see that in any other market. So a lot of risk/volatility in Bitcoin market, and that is also, of course, where the return is coming from. You cannot have a high return without the volatility. So I think volatility is something that is not found in coming back in a concentrated way in Bitcoin. That's how I see it, and that's why we have this extremely high returns as well. If you can stomach this volatility, you can reap the profits of the 200% returns almost on average for Bitcoin annually. I think the super cycle is a very interesting concept, but it's the greed and fear stands in between. And what I do see, by the way, is that once Bitcoin hits the stock to flow, a scarcity level of higher than anything else on the planet, higher than real estate, with a stock to flow ratio of 100. Once we hit that and Bitcoin becomes the most scarce asset on the planet, I think that could be the moment when hyper Bitcoinization or the super cycle will kick in a way that it's so much better than real estate and gold and all the other assets that everybody will buy it, and it will probably be de facto money at that time. So we'll probably, if you look at for example, the stock to flow model at the moment, it uses Bitcoin prices expressed in dollars, because dollar is the world's reserve currency and everything is expressed in dollars. But once Bitcoin hit that 100 stock to flow ratio of 100 and becomes the best money, in fact, in the world, I guess, it's time to price everything in Bitcoin, and the role of the dollar will be less at that time. But that's after the next halving and probably not before 2025, 26 or something. But I could see a hyper-Bitcoinization in that sense, a super cycle in that sense, that Bitcoin becomes the de facto money and the denominator of all things valuable. And I don't know if it's multiple year. All the bulls and bear markets are different always. They're never exactly the same. But yeah, I think we go up. The bull run isn't finished yet. I will go beyond the 100K level towards 200, 300. In last bull markets, the Bitcoin price went up 2x or 3x or sometimes even more above the stock to flow levels. We could see 300K Bitcoin. That would not surprise me. But after the next all-time high, fear will kick in and we will see lower Bitcoin price. And I guess that will lead to, there will be a trigger that triggers that fear and that downward movement. And that could be a government thing. It's mostly a government thing. Could be anything. But it could also be just a very short bear market this time. Only half a year or 1 year. It doesn't have to be multiple year. But yeah, it could be that 2022 is a bull year. 2022 is a bull year. So next year, bull run. 2023 is a bear market. 2024 is a stay in the bear market. And 2025 will go up again. I still hold that view. I think stock to flow is tracking very well since it was published in March 2019 when Bitcoin was below 4,000. It tracked really well. It mainly predicted that the halving would trigger another, was not priced in and would trigger another bull run, which we saw. We're now sitting at a bit below 60, what is it, 57 or something thousand. If you look at the charts, for example, this bot of Bitstein, which can be found on Twitter, it's the stock to flow multiple called S2F multiple, and it tracks the performance of the model on a daily basis. You can see that it tracks very well within most of the time within a 1 standard deviation band, and it went a little below the 1 standard deviation band into the 2 standard deviations band lately, but came back up from there, and we're now smack back in the 1 standard deviation band and going towards 100K. So yeah, I think it as advertised. Even I am a bit amazed by that, because the model should not work at all, in fact, right? The efficient market hypothesis, you cannot model the market. But I think the proof of the pudding, the real, victory lap, or how do you call that, is when we cross that 100K barrier. I guess that's the thing. And I guess it's good to explain that when you read the article, when you see how the model is made, it's just a normal regression analysis. It's nothing spectacular, nothing exotic. It's very, very simple, one input variable. But what it basically says, it's after the 2020 halving, the price level should be on average for that halving period. So until 2024 should on average be $100,000. That is the real proof or validation, if you will. If we track, if the data still fits that very simple linear regression, then it's all okay. But since technical analysis people somehow don't really understand the average linear regression thing and are really used to think in levels and price targets, I simplified that into if it should be 100K on average, then 1.5 year into the halving cycle, so 1.5 year after the last halving, it should at least cross that average of 100K, because otherwise it will be very difficult to be 100K on average. We should spend a lot of time above 100K to even make that average. At some point we should cross that line, and I guess historically looking to last 2 bull runs, 2017 and 2013, that point is about 1.5 years after the halving. So that's how I came up with end of 2021 it should be above 100K, which is very short and snappy, and technical analysis people understand it. So it's really the average that we should be looking at, but the 100K is short and simple.